Good morning, everybody, and welcome to this week's Motor Trade Radio podcast in association with eBay Motors Group. It is Saturday, the 14th of March, and you're joined by myself, Philip Nothard.
And me, Curtis Hutchinson.
Good morning. So we've got a few updates and exclusives to talk about at the start of the show this week, haven't we?
Yeah, we've got updates, exclusives, shout outs. We've
got everything.
It's all going on. It's all going on. Shall we start with an update? Because last week we reported on. Well, it was, at the time it was a highly speculative but very well informed story that AM ran about Stephen Eagle possibly buying some Toyota sites from Vantage. Well, that did actually happen during the week. So Stephen Eagle added 6 Toyota sites. And they're in and around Birmingham, so that really does significantly increase the Stephen Eagle presence there, and that they are a soulless Toyota dealer group. So that what a great purchase for them.
It is, isn't it? And that followed obviously the Virtue 2 sites in Bradford, didn't it, from yes. Vantage as well. So 8 sites in a very short period of time there, coming from Vantage into both Stephen Eagle and Virtue. So we can see the move still taking place, as we said.
Yeah, and we've, as you said, we've got an exclusive this morning, which we've got an interview with Marshall Motors CEO Dash Gupta and CFO Richard Bloomberger, because they've just issued their year-end results. So they'll be taking us through that later on at the end of the show.
And we did our first with this one, didn't we? We have got an exclusive for next Saturday's show, where we've got a podcast on the mental health and well-being special. So one to listen out for. And like I say, it was a technical challenge and a first for us, because we're actually interviewing 3 guests on that one in 3 different locations, and one of them not in the UK either. So that was a challenge, but we managed to do it, and it's a very intriguing, very interesting and thought-provoking interview, that one. So one to listen out for next week.
Yep, and we've got a shout out for AutoSwat. Now, AutoSwat, they're a new online platform dedicated to, it's really sort of enhancing industry knowledge amongst those of us in the industry. And that was launched by Perrin Moon, who some listeners will recall from his days with Auto Trader and Mannheim. So they actually ran a online poll. In fact, it's still active. And this is about the impact of the coronavirus on the car retailing sector. So they ran a question. So I urge anyone to check out AutoSwat UK on Twitter. And the question is, to what extent do you think the coronavirus will affect the UK automotive industry? And the early results are 46.2% say slightly, but we have no worries. So the other options are not in the slightest, significantly, which is 38%, and let's run and hide, which is 15.4%.
Right, yeah. Good old Perrin, yeah.
Yes, yeah, but worth heading over there. It's only been up a couple of days, so it'd be good to get more votes on there and see how that pans out.
And actually, one of the stories we've got in the headlines this week is at the end there, and that is about the Chinese online car sales as coronavirus spreads. So we'll talk about that towards the end of the headlines, can't we, this morning?
Yeah, so headlines today are Lookers delay annual financial results due to fraud investigation. Eden Motor Group acquires Hyundai Torbay dealership. UK dealers were Europe's fastest used diesel car sellers in 2019. Cars 2 Nissan Huddersfield gets up and running in a record-breaking 6 weeks. That's an intriguing story. So look forward to talking about that. Also with Nissan, Nissan presses ahead with £400 million Qashqai plant for Sunderland. And as you say, we've got an update on how the coronavirus is impacting car sales in China. Plus, of course, at the end of the show, our interview with Dash and Richard from Marshall Motors.
Definitely. So the first story you've alluded to there, it broke sort of late last night, didn't it, from Auto Retail, and the story's being continued this morning on AM Online. And this is that today, well, actually, we say when we on Wednesday of this week, the expectation was we were going to get the Lookers trading update. Their financial trading update, and it was broke in the news that they were going to delay it. And the headline is that Lookers delays annual financial results due to fraud investigation, as you said there, Curtis. So, I mean, there isn't a great deal of context to it at this stage, is there? Apart from that it was trying to obviously, because the announcement was due today, and it's not going to be released now due to a fraud investigation that is going to be taking place. So we won't get to see the financial results for Lookers as many would have been anticipating for December the 31st, 2019 for that full trading year. So again, we're not really sure what's gone on, do we, at this stage?
No, and this story is based on a statement that was issued through the London Stock Exchange, and the quote that AM run from Lookers is, as a result, the board has decided to postpone the announcement of its results until the second half of April, the group said in its statement. So whilst the initial findings are not material in the context of the group, it goes on to say, the board is appointing an external advisor to lead a full investigation into the matter. So we'll know, as I say, in the second half of April. But it's not a headline you would expect to see. So we'll watch this one.
No, it's not. And obviously, AM have gone into the departure of both Andy Bruce and Nigel McMinn, and obviously the continuing investigation from the FCA that sort of started a year or so ago into the business. So again, there's a lot to come out on this one. So one that we'll be watching, and hopefully we'll get to see the results in the second half of April, as it does say there.
Yeah, next up, we've got an acquisition. So AM Online, and the headline is Eden Motor Group acquires Hyundai Torbay dealership. So, yeah, this is the acquisition of the site in Torbay by the Reading-based Eden. And they completed the acquisition on March the 1st and opened for business in time for the 20 plate change. So great timing there. And it's a good acquisition. Eden already represents Hyundai. It's acquired a couple of sites over recent years, so this really does build their representation and adds to the portfolio because they now represent. Well, in fact, they started with Vauxhall and they've built that business, but. But they also represent Fiat, Mazda, MG, Peugeot, and Suzuki. So a good acquisition there, and a great photo on the AM story because it's the Hyundai Torbay team outside of the dealership, presumably on March the 1st, looking very, very happy. So it's good business there, run by Graham Potts.
Yeah, we know Graham, don't we? I mean,
we do. Yeah,
you know him from old with your interviews and events in your previous role at Motor Trader, but again, great business, and like you say, always used to be known as Eden Vauxhall, wasn't it? That they were dominant within that sort of Vauxhall market, where as you say, they've gone into Fiat, Hyundai, Mazda, MG, Peugeot, and Suzuki. So again, great business, great operation, and you don't see a great deal from them in the headlines, do you? You see, but when you do, it's a great story from Eden and statements from Graham there. So, and
it is,
great news from these guys.
Yeah, you're right. It's the odd acquisition here and there. And there's a lovely quote from Graham saying, we wouldn't have bought the business if we didn't think we could create value, and we would hope that our scale means that we can become a very efficient operator. Well, I think that's a given, really.
So moving on to our next story, and remaining with AM Online again, and this UK dealers were Europe's fastest used diesel car sellers in 2019. Try and say that too quickly. But again, looking at this is data from Indicator. Hopefully we've pronounced that correctly.
Yeah,
but
well done.
Done. Thank you.
I'm glad you said that.
Yes, exactly. I'm not known for my pronunciations of things, but anyway. So this is data that they've looked at in terms of the days to sell for diesels across the European market. And I mean, we've spoke about this over time, haven't we, with the impact of diesel in that new car market. And I suppose there's no surprise that the UK dealers continually were saying that they've got demand for diesels, they can sell diesels, the days in stock continue to improve in terms of the data that we were seeing from other suppliers there. And I suppose as supply shortens in the new car market, it's going to come into the used car market as a shortage of supply. But actually, in the used car market, people still want diesels. So again, it creates that supply and demand imbalance that we've started to see there. But it's quite interesting because they have quoted quite a few stats from across that European market, haven't they? And no surprise, Germany have been struggling.
Yes, yeah. So for the UK, in both, I don't know why it's just April and October, but this is what the research is based on. So this is last year. The average days to sell in the UK for diesels was 48. Now that compares with Spain at the other end of the spectrum, who took the longest to sell diesels at, 102 days.
Not popular in Spain by the looks of it.
No.
But again, Germany, Germany and Italy reinforced the tough time as they're experiencing with used cars. So again, I think it was 70 and 77 days in Germany and Italy. So again, they struggled, and there's quite a big gap between the UK and those areas in there, weren't there, in terms of that 48 to 70 there for Germany.
Yeah, hell of a gap. And anyone listening this morning should really head over to that story, because there's lots of detail, lots of data. And if you're thinking things are tough at the moment, then possibly better here than elsewhere in Europe.
Yeah, again, but we sort of seeing the impact of that low supply, aren't we?
Yeah. So you're listening to the Motor Trade Radio podcast in association with eBay Motors Group, the only weekly podcast serving the car retailing sector, and available online at motortraderadio.com and by subscribing for free on Apple Podcasts, Google Podcasts, Spotify, YouTube, Deezer, and SoundCloud.
So we're now heading over to Car Dealer magazine, and this is the one you sort of talked about at the start of the show there, Curtis, and it's an interesting one, this, because this is about that speed, isn't it? And if you think about, we had that interview with Robert Forrester when he was going through the acquisition of the VW sites, and then the other unfortunate closure of the site up in the Scotland territories became sort of a reactive purchase. And this kind of demonstrates how quickly these businesses can turn around an acquisition, isn't it? Because this is the Cars 2 group who have sort of a number of dealers across the northwest there, in sort of Barnsley, Bradford and Wakefield, and they managed to acquire the Rybrook site over in Huddersfield on Leeds Road and turned it round in 6 weeks from the acquisition to an operating business in time for March, didn't they?
Yeah, it is one hell of a quick turnaround here, because they were told it would take at least 8 weeks, but clearly they wanted to be up and running by the 1st of March,
Yeah.
which is exactly what happened. So, congratulations to them. This is a really sort of good, upbeat story. And there were, as a result of this site opening, there were 10 new jobs created. And the news story actually talks about the high level of demand for those 10 jobs, which is also good news. And there's a good quote from Operations Director Neil Crossley in the story saying, "We've worked incredibly hard to get the site ready for customers as soon as possible, faster than anyone thought we could. We were told it couldn't be done faster than 8 weeks, but our team were able to reduce that to just 6 weeks." So, congratulations there to them for turning that around so quickly.
No, and I see it's fairly local to me, and it's a busy road for car dealerships down Leeds Road there in Huddersfield. So again, they can be. It was probably key that they did get in there, and as you say, up and running for that March business, as we saw with Eden previously. It was key is to get into that. You don't want to be sort of walking into a business partway through the month of March, or possibly any other acquisitions we might not see now until March is over and done with. Because I suppose if you were selling, you'd want to bank your March business, wouldn't you? Essentially, yes. Before the sell, or if you were getting in somewhere, you'd want to take the advantage of March as well. So, again, one to watch. But as we said previously, you don't see much from these guys, but when you do, it's a nice story and a great opportunity for the Cars 2 business. So, one that I'll suspect we'll see a few more of in no time at all as they sort of move further into that Nissan franchise.
Yeah, and maybe the guys would like to come onto the show and just talk us through how they managed to turn it around so quickly. So an open invitation to you there at Cars 2.
And segued in nicely into the story in The Guardian that you found there, that Nissan presses ahead with a 400 million Qashqai plan for Sunderland. And this is a fantastic good news story, isn't it, for the UK, considering everything we talked around Brexit and the people thinking of leaving the UK from a production perspective and things like that. And we've seen recently the SMMT production figures, which are never really a great news story, are they? But this is that they've Japanese car maker unveils a 52 million production press amid post-Brexit tariff warnings. So again, we're sort of a few months off still from the deadline of Brexit, but again, great news for the UK that this is going to continue.
Yeah, and as you say, this is totally unexpected because Nissan could have been excused for just waiting it out to see what happened with the trade deal by the end of the year. But they've got to make decisions now about what they're building, when they're building, because the gestation period is so long. So they've committed, as you say, £400 million to this production facilities and ramping it up for the third generation Qashqai, which will be produced from 2021. So, this guarantees the future of Qashqai production in the UK. And, let's not forget, Sunderland employs 6,000 workers. So this is welcome news for them as well.
Yeah, and it's the build, the Leaf, the Qashqai and the Duke models on the site. So again, it's great good news, particularly for Sunderland, in terms of continuing that employment and jobs for the future as well, and commitment to that UK market from Nissan there. So, fantastic, and I'm sure there's it's good. I mean, interesting. We've seen a couple of good news stories from Nissan because stories of late haven't always been good for Nissan, have they? With the Carlos continuing around that arrest of the former boss of Nissan. But no, it's great that they're doing this.
I've got an update on Carlos Ghosn.
Oh, yeah, another one. Go on then.
Yeah.
Where's he now? He's not in the trunk of somebody's car somewhere going across the border.
No, he's still in Lebanon. And right. On the Automotive News Europe website, they're starting to promote a conference that will be held in Lebanon, and Carlos will be there because he's featured heavily in the marketing. So I mean that's going to be a fascinating one to watch. Hopefully they'll stream that.
It will be, won't it? Yeah. If he's still there, you never know, mate. Well, we'll see. But heading over to BBC News now, And we talked about the coronavirus at the start there from Auto SWAT, and more recently there's been lots of conversations, and there is conversations every day on coronavirus, and there is that you get more news coming out on it and more updates, etc., across the UK and the international market. But again, this is about China, and it's saying that China turns to online car sales as coronavirus spreads. So it's an interesting one, this one, isn't it? Because we've been talking obviously before the show around the UK, and we haven't really seen an impact in the UK in terms of that retail. The weekend figures from the dealers have been reporting a very positive marketplace. You question whether it is still early days in terms of the impact around productivity and supply of tier 2, tier 3 aftermarket, after-fit products for parts, etc. We've seen what's happened in Italy this week. Will that in time affect the supply of product coming out of Italy into the European and UK market? Possibly. Again, it's kind of continually evolving, but again, the BBC have focused on China and saying that more automakers are selling cars online in China as worried consumers stay away from the showrooms to stop the spread of the coronavirus. So what do you make of this one?
Well, it is an interesting one, and it follows on from what we were talking about last week with the Chinese market, because I've seen different figures for how much the Chinese market has been impacted. 80% down is one of the figures I've seen, but I've also seen 92% down as a result of the coronavirus. But there's the story is really based on what Geely are doing, so that they've opened up an online sales channel, so joining the likes in China of Tesla, BMW and Mercedes. But I guess what's particularly interesting in this story is the analysis from Frost and Sullivan, who speculate that the coronavirus might provide the impetus to digital retailing for cars going forward. So, they may be onto something there, because by these brands having online sales facilities, once you've done it, presumably you're always going to do it that way. And Geely are talking about delivering cars to customers, so not needing them to come into dealerships to test drive cars in the first place. So it is an interesting one, this.
No, and you're right. I think there's I think in the UK there is being a lot of emphasis, a lot of focus on that online marketplace for the retailers. It's fairly robust in many areas for a lot of the AM100 and other retailers. And again, the wholesale market again has that robust digital online proposition as well. So again, we're fairly well set up to be able to move a little bit further into that online retailing and wholesaling of vehicles in the UK, if it does actually get that bad over in the UK. So I think we're fairly confident that we've got a fairly robust digital proposition to continue business in the meantime. So again, we don't know, do we? You wake up every day to different updates and different stories. So it's one that many businesses are watching very closely at the minute, aren't they, and advising as they get updates.
Yeah, exactly right.
So we'll now head over to the interview with Dash Gupta and Richard from Marshall Motor Group on their update on their financial trading.
Our special guests today are Dash Gupta, CEO, and Richard Bloomberger, CFO of Marshall Motor Group, who are joining us to talk about their full year results. Welcome back to the show, Dash and Richard.
Hi guys. How you doing? Hi, good morning.
Good morning. Good morning, gentlemen. So an impressive set of results with record revenue up 4.1% from 2.18 billion to 2.27 billion, and a profit before tax up 8.9% to 19.6 million. And in what was the challenging year for the economy in 2019, and general car retailing was obviously a focus for many people across that sort of full year. Take us through some of the key results and some of your like-for-like figures for revenue and operating profit.
Yeah, sure. So a number of highlights, Phil. We had a strong set of numbers, as you've seen, and certainly I think the sort of analysts and media have sort of been describing them as sector leading. I think there's a bit of coverage on us in the Telegraph and the FT today, actually, which I haven't had a chance to read yet, but a couple of people have texted me saying very positive things in there. So we expect them to be sector leading again, which is pleasing. So it's a number of years of sort of that track record. I think even when you look at the sort of market conditions, it's very, very difficult. I think for a lot of people, that's reflected. I'm sure you've seen the ASD data talking about last year's return on sales was 0.8. But we actually able to got through that. We delivered a strong performance in that context, and actually we outperformed the market in every key operational metric for us. So we outperformed the total new market, total new retail market, the fleet market, the used market. So it was a clean sweep across the board, which was an excellent result. And actually, if I look at some of the detail behind that, our like-for-like total new unit sales actually grew. We grew by 0.3%, which is a really, really pleasing result when you consider the conditions. We outperformed on new retail, outperformed on fleet. I mean, our fleet was up 4.5% in the market. That was down 1.7%. That was fantastic. After sales was up 3.2% on a like-for-like basis. But used for us was absolutely standout again. And you remember when we spoke to you before, that's been a key area of focus for us in recent years. And actually, that was up 6.1% on a like-for-like basis. So significant outperformance to the market, which was down 1.7%. So, really, really pleased with that. And I think when you look at some of the other highlights, our like-for-like operating profit, so this is the core business, was down only 4% to 33 million. So I'm a bit disappointed because it's the first year I've not delivered a record profit as CEO for 12 years at Marshall. So hopefully I'll still get re-elected at the AGM in May. We'll wait and see.
I think you'd be all right.
But also, we've had successive years of like-for-like organic growth on a revenue basis. So all of those contributing factors made us have a great set of numbers in the year. And our dividend we've recommended a final dividend of 5.69 pence, which pays out 8.54 pence, which I think on today's share price is a sort of dividend yield of sort of 6.1, 6.2%. So, really, really pleased. Good set of numbers. And actually, I think that's really, Richard, I think I've pretty much covered most of it there.
Yeah, I agree. I think we'll talk later probably about the strength of the balance sheet. But yeah, in terms of revenue and profit, that's a good summary.
Yeah, now, Richard, this is probably one for you. Daphne's just talked about new and used sales across the group outperforming the market. So like-for-like new car sales were up 0.3%, used sales were up 6.1%. Well, what actually powered these sales?
Yeah, I think, we do the basics well, and I think we push hard with our system. We've got state-of-the-art Phoenix 2, which gives us full visibility on the stock, on the market, and we can really drive out like-for-like sales. I think if you speak to any of our franchise teams, any of our sales managers, and ask them what their key objectives are, driving like-for-like growth will be one of their key objectives. They know that's one of our things that we want to grow. You look at the acquisitions we made. We look at partnering with the right brands and the right locations, and that really gives us the opportunity to be in the right place, if you like, at the right time to drive those revenue growth and those unit sales. So I think it's forefront of our minds. It's led from the top, from us driving that performance, and the teams all know that's the way we want to perform, which is exceptionally important when you've got gross margin pressures and cost headwinds to deliver that revenue growth to really mitigate those headwinds is essential to our business model.
I think the other thing I would just add to that as well is people. We've got a very, very stable leadership team. So as I just said, I'm just about to click into my 13th year. Hopefully that won't be unlucky for me, but the executive committee, there's 6 of us. We've got 36 years continuous service between us. If I look at our franchise director team, very long servers there. And our GM turnover was through the year we hit 13.9%, which I know nobody shares their data, but 13.9% was the lowest we hit last year, which for GMs I think is exceptionally good. We've focused a lot on our culture, as you know, so 10 years Great Place to Work status, 5 years in a row ranked in the best UK workplaces. So I think that all helps as well. We've been focusing on diversity. 24.2% of our management population now is female, and that's up from 15% just 5 years ago. So I think it's all of the things that Rich has talked about: systems, drive, culture, focus. But culture and people, I think, also underpins all of the things that Rich has talked about as well.
And Richard, you mentioned it there in terms of the cost headwinds in the sector, and I think last time you guys were on about the importance of that cost control for your business, and how have you achieved that in 2019? Because I think last time you were on and we were talking about that importance of managing that cost base is all part of these sort of achieving these kind of results.
Yeah, I mean, look, we faced strong headwinds in the year again, as we expected to, and as the market is doing. So, we've got a lot of people costs, our fixed salary costs increased in the year. There's legislative changes. For example, the auto enrolment rate change in April 2019 cost us £0.6 million, and those are out of our control. And we've got the national minimum wage change coming in this year. We've got continued inflationary pressures around our subcontractors as well. So people costs within our subcontractors. So our cleaning costs increased in the year. We've invested a lot in recent years in property and ongoing sort of capital expenditure, and that's increased our depreciation costs in the year. So we face those headwinds. So it's important for us to have structured cost control and monitoring and driving the right behaviours. And we really hit this year around on top of the normal programs. We had a good look at our temporary labour stuff and our use of company vehicles and associated fuel costs. And there's all those initiatives together delivered a benefit of £4.3 million to offset the increasing headwinds and costs that we had. But that's in our DNA. That's what we'll continue to do. There's enough discretionary cost spends for us to target, and we've got a supply chain team, a procurement team. We've got a new buyer joining us, and we'll be targeting our contracts and negotiations to drive out further costs in the future.
Now, Daph, in terms of the network, it was a year of growth with the addition of 20 new businesses costing £31.6 million. Can you talk us through some of the acquisition highlights? And I guess what listeners will be particularly interested in is, do you have the balance sheet to do more this year?
Okay, well, I guess that's a sort of two-part question there. So, Richard, if you cover the balance sheet, maybe I'll talk about the acquisition. So, yeah, we spent £31.6 million on adding 20 businesses. So, we added 2 Honda businesses, which we acquired from Jardines in Reading and Newbury. So, a brand that we're already reasonably big with. So that takes us to 8 locations there. And that just, the scale just basically enables us to sort of share best practice, share costs. Have a better, deeper stock pool, which of course is good news for our customers because it drives sales. With Volvo, we added the Derby franchise, which we acquired in December from Virtue, which took our representation to 9 for Volvo, and we expect to do around 10% of UK sales volumes for the brand there. But I think probably the most significant development in the year for us was the expansion with Volkswagen Group, which makes us now their largest partner. And I'm really pleased with this because we only gained our first Volkswagen franchise in 2012, and I think for me really demonstrates our operational capabilities and strong manufacturer relationships. So today we now have 14 Volkswagen passenger car franchises, 7 Volkswagen commercial franchises, 9 Audi, 12 Skoda, 3 Seat and 5 trade parts specialists. Bar 1 or 2 issues on Aylesbury, we hope that we may complete on that later on this year, but there's still some work to do on that one. And that's great because what it does is it gives us a sort of contiguous territory in the home counties for Volkswagen in particular, which is great news for our customers. As I said, it enables us to have a deeper scale with that brand, share best practice, leverage our scale, share costs, etc. So yeah, we're really proud of what we've done with Volkswagen there. I think for me, a key part of our strategy is making sure we're partnering with the right brand, something you've heard me say countless times. When I look at the brands that we've expanded with, I've got absolutely no doubt. If I look at Volkswagen Group, there is no doubt they are undoubtedly going to be one of the winning brands in the long term. Particularly when you look at the levels of investment they're making in terms of their future, electrification and mobility strategy. So 66 billion euros. Really pleased with that. And obviously along with that came the Skoda acquisitions we did last year. So we did 3 separate transactions there, adding 7 businesses. So early part of the year we added Nottingham Leicester, which we bought from Sandy Cliff. Then in February, Northampton, Bedford, Letchworth, Harlow from Progress Group. And then obviously Milton Keynes came with December. So 10 of those sites are contiguous through the sort of spine of the country. And again, we expect to sell around 10% of their UK volume. So, really pleased with all those acquisitions from Honda, Volvo through VW, VW CVN, Skoda. And we also added a big body shop, which is VW approved in Loughton, and a Ford Parts Plus operation in Cambridge. So busy year, and I think that's also what was particularly pleasing. Not only did we have all of the work that we needed to do in terms of those acquisitions, because that was through 8 separate either startups or acquisitions, so that kept us very, very busy, but we were also still able to keep the plate spinning on the core business and outperform the market as well. So very, very pleased, and I think the management team and the business have done a great job there, so they have to take the credit for that, really.
And how's the balance sheet looking for more acquisitions this year?
Yeah, I think it's worth just remembering and reminding the group is very, very cash generative. So if I look at 2019, we had significant cash inflows from operating activities, and after we spent out on tax, interest and working capital movements, that left us £28.9 million of cash generated from operations. We invested in the year £46.8 million into capital expenditure and acquisitions, and we also distributed £7 million on dividends. But they're choices we can make because we generate cash. So despite the investments in 2019 on both growth capital and acquisitions, we closed the year with leverage at less than 1 times EBITDA. And that means we have significant more headrooms to grow if the right investment opportunities arise. And we have unutilized funds in our revolving credit facilities, and we've got very supportive shareholders. But just to echo Dash's point, what I would say is, and we consistently say, is we'll only make acquisitions which fit in with our growth strategy of the right brands in the right market.
Right. So, and just to sort of finally on this one now, just thinking of the March and the first quarter, and earlier on, Curtis and I were covering some of the headlines, and obviously within that is the developing position with regards to the coronavirus that I'm sure you guys have been talking about and been asked questions on as of late. But in terms of where do you feel, obviously, the unknown impact of potentially coronavirus in the short term? We've come out of Brexit last year, and kind of, that was blamed for various reasons across the retail sector. And as you know, guys, that sometimes we're very easy at blaming things on other areas such as Brexit, etc. But how is March performing, and how do you believe the first quarter will look for car retailing?
So I think if you look at what we put in obviously we're a publicly listed company, so we can only state to you what we are able to say on a public basis. So and actually on the basis that we put the statement out yesterday, it's pretty up to date. To date we have not seen any impact. Okay, and what we actually said in our statement is actually our March order book is encouraging. Okay. Now, what we've also said is we're really acutely aware that, there is COVID-19 out there. I think, it's a situation we're monitoring every day. With our systems, we track inquiry levels, emails, phone calls, order take, calls into our call center every single day. So far, touch wood, touch everything, we haven't seen any sort of impact. And as I said, the statement, and let's remember this has to be legally verified as well. As a company, we've said we see the position as encouraging. Okay, so, but equally, we are acutely aware that we've seen what's happened in Italy, in China, and this thing could move at a rapid rate. So, I think from my perspective, I had a call with the team this morning, about 15 of us on the call, and I said, look, guys, we can't control any of the stuff that's external, be that, coronavirus or anything else that's going on elsewhere in the industry. What we've got to do is focus on making sure we maximise every opportunity that comes to the door, love our customers to death, and control our business, and that's what we need to focus on. So, we, as I said, in summary, March encouraging. We are tracking COVID quite closely, but we've not seen anything today. But that's not saying it couldn't happen fairly quickly.
Yeah, no. So, I mean, you're right. I think we had conversations in previous years around Brexit, and there's things that you've got control of, and there's things that you haven't got any control of, and it's a case of focusing on what you have got control of and you can influence and change. And this isn't one that you have any influence or control of, is it? So I agree with that one. It's a developing position at the minute. So good, great. So I mean, just to finish on, so appreciate you guys coming on, and obviously it's been a busy week for you, and I know you've had some late nights and some certainly early mornings as well, and I'm sure it's time to get some rest when you can, but I'm sure mid-March and ending the first quarter, there's probably no chance of that in the short term. So thanks a lot for coming on. It's been appreciated as always, and I know the feedback from the listeners, they love to hear you guys talk around the market and your performance. So well done with the results again, and I just want to wish you luck for the first quarter and the rest of the year as well.
Brilliant. Thanks, guys. Good to talk to you.
Yeah, thanks, guys. Cheers.
Cheers, everyone.
Thanks very much. Bye.
Again, always a fascinating interview with those guys, isn't it, Curtis?
It is, yeah. And I mean, what an impressive set of results they've got there. So, but plenty of insight there. And, the fact that they're sector leading across so much of their business. And, in terms of, interesting what Dash was saying about, fleet, new, used. They are the key barometers, and they're ahead of the game there.
Yeah, and as they said, they're obviously cash rich. Controlling that balance sheet, they're acutely aware of obviously cost challenges coming into the business that they don't necessarily have control of, but they alleviate that by putting other cost controls in to make sure that they cover that. So again, a true testament. They came on last time talking about the importance of cost control and resource and scale, and obviously it's paid off for them, and a great year in terms of those acquisitions that they put through in 2019 as part of these results as well. So fascinating and like you say, class leading in terms of their performance. So I just wish them luck for the rest of the quarter and the rest of the year as well.
Yeah, and Richard made it quite clear that the balance sheet is looking pretty strong. So I think we're going to see plenty more acquisitions over the coming months.
No, you're right. No, I agree. I think and the VAG business sounds like there's probably one there in there as well. So they're fairly building that strong relationship with the VAG group.
Yeah, I should imagine any retailers who are thinking of exiting VW will be knocking on Dash's door.
Yeah. So that's it for this week, isn't it? So great interview there from the guys from Marshalls, and some very interesting headlines as well with acquisitions and the delay of the Lookers financial statement as well, and what will come out in that in the second half of April there, and demonstration from Cars 2 there in Huddersfield Nissan there, that you can take over a business and turn it around in 6 weeks as well. So some great headlines this week, Curtis.
Yeah, no, thanks for that, Phil. You've been listening to the Motor Trade Radio podcast in association with eBay Motors Group, the only weekly podcast serving the car retailing sector. Many thanks for tuning in. Do join us again next week for our mental health wellbeing special. Until then, it's goodbye from me.
And it's goodbye from him.